Stocks extend the biggest monthly decline in 3 years on this week's first trading day, amid concerns that China won't continue to shore up the markets. But what does the rest of the week have in store? I'm joined by Wai Ho Leong for the Dukascopy Week Ahead. Indeed, all eyes remain on China at present. This morning, Chinese brokers seem to be bearing the brunt, while European stocks are also suffering. But what lessons can be learned from the recent market turmoil?
Well, this is a crisis of confidence, obviously, and given that this episode has ignited concerns over a hard landing in China, I think it's important that policymakers in this part of the world at least react quickly and decisively in dealing with this sorts of crisis of confidence before it spreads further into Europe. And I think, to be fair, I think the Chinese government has learned the importance of responding quickly, and it's moving faster now.
Risk aversion seems to be the key. Money is moving into the yen, which is advancing ahead of the Chinese manufacturing numbers. The euro-yen correlation is at its highest since 2007, but where do you think this pair can go from here?
It's quite likely that the safe haven flows that you mentioned into the yen have already taken place, given that by now I think investors have priced in the weakness in the Chinese data. In the coming days, unless data takes a turn for the worse, this could mean that the yen, in fact, could start to weaken again relative to the euro. So, the reverse of what we have seen previously might happen in the coming days.
If we remind ourselves of last week and into the weekend, at the Jackson Hole Summit, officials seemed not to be too concerned about inflation. Others say the Fed have backed themselves into a corner. But to your mind, Wai Ho, is a September hike still on the cards?
Yeah, this is the million-dollar question. I think anything is possible, especially given the lack of consensus at Jackson Hole that we saw. We have, in fact, pushed back the Fed hike call to March 2016 from September. But I think I would still say that there are risks of an earlier move in December and September, especially if now fears over China market turbulence starts to calm down a notch.
The Aussie dollar is trading at a 6-year low ahead of the RBA decision. The ECB will also be in action on Thursday, and the week will be rounded off by the jobs report from the US. Do you see any surprises from the events or data releases in the coming days?
Well, not particularly. I think the US continues to be a bellwether of strength. We continue to expect a decent US jobs report, expecting payrolls to gain 225K. That's a little over consensus and more than last month. So if this pans out, then, and if the RBA stays dovish and the ECB stays dovish, I think what happens is that these currencies, the Aussie and the Euro, should remain on a relatively weak footing.
Wai Ho, great to speak with you. Thank you. Well, that's all from me for the moment, but the team will be covering all the events discussed and more throughout the week, so please do keep clicking back. Goodbye for now.